In this video, I'm going to talk about how important is the closing price. Stay tuned. Hey traders, a very warm welcome to you. Okay, so how important is the closing price when we're looking at a market? Let's look at some examples. So if we have a scenario where we are doing not much, let's say the range for the week is here. We've got the high and the low, it's already put in, and we're now midway through the week or midway through the month, and the closing, we haven't taken out the high, we haven't taken out the low, and the close is kind of here. We've had a bit of a nondescript day. We've pushed higher, we've kind of pushed lower, we've got a nothing candle. The prior day was something like this. Again, not really that exciting. Maybe we took out the low. In that scenario, if that was the close there, is that important? Do you think that was important? I would suggest no, because we haven't done anything new compared to the prior day, compared to the week, compared to the month, compared to the year. We've not done a lot. We've broken out from this low, we've kissed through the low, had a little look, no one's that interested. We've pulled back up and we've closed pretty much 50% of the daily range. It's an indecision kind of close that. Now, this is where it gets a little bit complicated, because we can't just say, yes, it's important, no, it's important. We have to put it in context of the structure of the day, of the month, of the week, of everything. But let's imagine now we had that scenario, and if I can get my thing here, my rag out here, we have, let's say we had this, but now let's say we pushed up, let's say we opened here, we pushed up through the high, broke the high and closed there. Now, do you think that's important? Yes, that is important, because where we close after we've done some movement in fresh air, so let's say we've pushed through the high here and we close there, even if we close there, or for example, with the same thing, but we close down here, right? Is that important? Of course that's important, because what it's said to us, it's tested levels that haven't been tested before. We've pushed up, and in this scenario, we've pushed up to the high, we've done a little high, and then we've closed the high, and it's been accepted that that is the new value for that market. However, if we see this scenario where we've pushed up to the high, we've come down and it's been rejected, it's basically said, hey, any buyers want to play game up here, want to buy up here? No, it comes down, it closes at this point. That becomes interesting. That becomes an opportunity for the next day, because it's telling us what's happening underneath, you know, kind of in the engine bay, if you like, of the market. It's saying, hey, we've tested a level, buyers they've been promoted to, and they haven't come in, they haven't stepped up. No one's considered that as value in this scenario, or they have considered that as value. It's potentially a new move we've got here, because we've got a weekly high, we've broken our prior day's high, we've broken our weekly high, and we've closed above it. Compared to this one, we've broken our prior day's high, our weekly high, we got rejected. So in other words, the intraday chart is going to look something like this. Up we go through our prior day's high, through our weekly's high, through our weekly high, rejected, closing down here. You know, the next day you're going to be looking for a slam into the lows and probably a breakout of this prior date low, because of just literally that little bit there has given you a clue as to who's doing what, why, and where. So how else is it important of a closing price? So let's forget, I think you can't forget the fact of what's happened the prior day, what's happened the prior week, where are we, we're in relation to everything. Let's also look at a trend day scenario. So if we have a trend day, and what I'm going to do is I'm going to draw an intraday chart here, and this could be, okay, I'm using an intraday perspective here, but you could also use it a longer term perspective. But let's say we have a trend day, okay? If we close in the upper, it's not really a third, is it? But let's say the upper third or upper quarter, then that is a good indication that it's a proper trend day. You started at the low, you closed at the high. It's a good way of framing it and saying, you know what, it was a genuine trend day, high to low, low to high. Yeah, we've done a little bit of chopping about, we've closed in the upper tier. So the next day, we're probably likely to get a little bit of follow through. We may not get a second trend day, but let's say, for example, I would always look for this kind of thing. This is day 2 here. I would always look for it to maybe dip overnight, look for some support in the overnight session or in the early morning when we open, and then trade for a break of high. Not expect too much, obviously depending, if this is based on a reprice scenario, in other words, we've had some sort of economic data or something that's a lot of volume coming, or maybe a massive breakout from a multi-year high or something really interesting, I may well look for a 2-day move and look for but I'd be very cautious about, maybe I'd run it to about midday or something, thinking, okay, we might get a midday double top, we might get a noon, push to noon, and then back off, and then maybe a second bite of the cherry in the afternoon. But this would always be my play, and this is why the importance of the closing price is, yes, if we close in the upper third, upper quarter, however tight you want to make it, then the next day I do want to be looking for some support to buy at for a further break of highs, because it's just telling us that this is potentially a new valuation for this market. And similarly, I've just chucked the cloth away, I'm going to use it again. Similarly, let's look at a different scenario here. Let's look at this scenario. So we push to highs, we come down, and we push to lows, and we close kind of below. That's supposed to be an axis, but now I've made it into a low, and we close here, right? That's our close. Okay, we've taken out some sort of decent high, we've taken out some sort of decent low, or 2 levels decent low in this scenario, and we've closed there. Is the close important? Damn right it's important, because we've advertised for buyers around here. No one's, or people have played the game, but sellers have perceived it as value. A second wave has come in, and generally on the intraday chart as well, this volume is going to be higher in this section here, because it's a new breed, or new breed, not really a breed, but a new wave of selling coming in, a lack of buyers causing this to push lower. Is that a useful close? Yes, that's a very important close. How different is that to, let's say, this scenario? Again, I'm messing around these charts. How different is it to this scenario? Where we do that, we push to highs, we push to lows, we've gone to lows, gone to highs, and we've closed in the middle. Completely different. So that's how important the closing price is. That's a significant importance. And the fact your kind of guess is, or your hypothesis is, that the only reason we ended there is because the bell went and you couldn't sell any more. Your theory would be, if we were still open, this thing would drift even lower. So you've kind of got to be aware of the close. You've got to see where the close is. Now, I know that you can take too much weighting in the close, and I think this is why we talk about it's so important to see where it is in the structure of the prior day, the structure of the week, the structure of the year, the structure of everything. And also, very, very quickly, where we close after news or after good news or data. So if it's a stock you're trading and we have good earnings and it pushes to highs, but then it reverses intraday and closes in the lower third, you need to pay attention to that. That's quite interesting, because maybe people with larger volumes, larger sales to put through have waited till the afternoon, and we might get some follow through. If we've pushed and we've closed at highs, then you might get some follow through the next day. So it's kind of extrapolating what you think would happen if the bell hadn't gone, where we would go. In this scenario, you don't know, it's a 50-50. Why would you take the trade? In this scenario, when you've taken a few people out of the highs and now you're closing at the lows after breaking key levels, you've probably got an edge to take on the short side, just the same as I was saying, waiting for some support after that trend day. So I think it's an important thing. It's not the be all and end all. It's not something to be completely focused on, but it definitely needs to come into your analysis when you're looking at a chart and trying to frame your next day from a day trading perspective, or even if you're looking to get in from a swing trade for a multi-day, multi-week move. Where's the close relative to something interesting that's happened during that day? All right, guys, comments below. Let me know your thoughts on the closing price. Otherwise, take care. Good trading. See you in the next one.